Hello, hello, hello. Is there anybody in there? Just not if you could hear me. Is there anyone home? Is there anyone home? Where have you been, Bart? I wish there was a better reason for my absence, but there is not. I've been having some technical difficulties with my vidyard browser extension up there in the Chrome. This is like my fourth attempt. I've had some really good videos that I've recorded for you that are apparently never going to see the light of day. I mean, you could watch them, but for some reason there's no sound to them. And believe me, I checked the audio before every recording. So what I did was I deleted the browser extension vidyard, restarted my computer for probably the first time in a year, reinstalled vidyard, and it worked. At least my test works. I'm hoping that this video works as well, because what I wanted to do today was share with you my thought processes and how I like to track my trades on the stocks that I enjoy selling options, collecting dividends, running the Wheel of Fortune. Wheel of Fortune. So let's start with Johnson & Johnson, JNJ, because this wasn't a great trade, but I wanted to see how does it look with regard to an annualized return. So on February 14th of this year, I did buy 100 shares of Johnson & Johnson for 162.70. And ever since that purchase, in my mind, I automatically registered that I bought them for 162.50. So that'll come into play just a little bit in a little while. So immediately after making that purchase, I did sell a covered call on Valentine's Day at a 165 strike, one contract, and collected $160 in dividend. And the reason that I bought Johnson & Johnson was I thought, I think 165 is a fair price for Johnson & Johnson. So if I can get it for 162.70 right before X dividend date and then collect that dividend, I'll do so. And that's exactly what we did. So on March 7th, we added to our cash flow position on Johnson & Johnson with a $113 dividend. On April 11th, we sold another covered call at the 165 strike and collected $167. And then I don't know why, but I'm sure there was a reason. I did buy that closed on April 18th, that 165 covered call. I bought it closed for a $15 debit. On 4/24, we sold another 165 call, collected $104. And then on 5/3, 5/12, and 5/19, we rolled those positions, but we also rolled down, as you can see. So we collected $66. Then we rolled it down to 162.50 because Johnson & Johnson was going downtown to Chinatown. And I was rolling the dice and taking my chances. Now, keep in mind, in my mind, I still thought I had paid 162.50, although I paid 162.70, but you can see the premium also going down the drain. 44, then 17. Then we even rolled it. We sat on it and then rolled it again, or sold a call for 160 on June 2nd and only collected $17 bills. But we did enjoy another dividend on June 6th of $119. So you can see the difference between the 113 dividend and the 119. That's because Johnson & Johnson, they are a dividend growth stock, dividend growth payer. So every year they do grow their dividend with what they disperse to their shareholders. Hey, that's me. So we went from 113 to 119. Very nice. We rolled that 160 call for 72, rolled it again for 100, rolled it again for 43, and then we even rolled it one more time on July 5th for $29. Then on 7/15, we rolled it out and up to the 162.50, collecting $25. And then on July 28th, those shares were called away. They were assigned at the 162.50. But then doing the math, I realized, hey, I lost $20 between what I received in payment for those 100 shares and what I paid, which was up here. But I did round that up to $16,270 for our math here. So we minus the $20, and then we end up with a total cash flow of $1,041 in 164 days of that trade. So let's bring out the abacus and run that annualized math that we like, right? So we did make $1,041 divided by the $16,270 we coughed up for that investment. And then we were in that trade 164 days, and then we annualize it with the 365 to come up with 14.2%. So on a trade that I thought was, fairly lame, it's still annualized at a nice number, 14.2%. Not the number I target on these types of trades on my Wheel of Fortune trades. I'm shooting for 20% annualized. But on a trade that I thought, I probably was under 10% on return, I ended up being at 14.2. So I'll take that. I'll take that every day. And how often on Sunday? Twice on Sunday. So let's move on to Gilead, because I thought Gilead was being called away on Friday. If we go to the big board, I had Gilead on the board at $79 expiring on August 4th. And during August 4th, during Friday, the stock went up all the way to just over $80, $80.20 or whatever it did. So I thought, hey, that's going to be called away. Better update that spreadsheet. So I did so, but then by the end of the day, it was down to like 78.80 or so. So I'm like, well, that's still a good number to roll. So we did roll it out to August 11th, those 500 shares. But looking at the numbers, if we go back to the beginning on May 1st for the Gilead Sciences, we did the old training wheels trade, which is to start with, it's a wheel, but it starts with the training wheels, which is the put credit spread. We had a 79 short against the 76 long, 5 contracts collected $120 right there. And then on May 5th, hey, that's Cinco de Mayo. On Cinco de Mayo, along with drinking margaritas and Corona with lime, we sold that closed, that long leg at $76 strike, 5 contracts, and collected another $80. Now, the plan on this as well was to get assigned on the Gilead so we can collect some dividends on what I thought was a fairly priced stock at $79. So we did then immediately on May 5th, we rolled that 79 because we had that 79 put now uncovered. We uncovered the 76 off of it. So it was, the risk had grown dramatically because now we had the put on the board. We rolled the 79 for 150. On May 15th, rolled it again for 160. May 26th, added another $80 bills. And then on June 2nd, we rolled again for 107. We were assigned 200 of those shares on June 8th at $79 for $15,800 investment. Immediately turned around and sold a call on that same day on those 2 contracts, collected $56. And on June 12th, we were assigned the rest of the 300 shares at $79 for $23,700, which is a total of $39,500. That was our investment. Okay, so immediately sold. So that would have been a Friday, June 2nd. So on Monday, no, that couldn't have been right. That must not have been a Friday. Whatever the case, it was probably because it was going downtown to Chinatown. So on June 14th, we sold those 3 contracts for $174 on a covered call, rolled the 2 contracts for $40. Then we took that dividend and put it right in our pocket, $375 dividend. Sold another call on the 3 contracts on July 3rd for $90. And then we got them all 5 together, sold a call on July 17th for a nice, sweet $500 payout. I thought they were going to be called away, but we rolled them again on Friday for $283 additional dollars. So right now where we stand at $2,215 in 96 days. So the math is, get out the abacus, check on the math. 2215 divided by the $39,500 we got on the table, 96 days into the trade, annualized with the 365. Drum roll, please. 21.3% is where we're at right now. 21.3% annualized on the Gilead Sciences. have that rolled out to next Friday. If it's called away, it's called away. Good knowing you. Thanks for the cash flow, is what we say. So we'll just keep rolling it as long as we can, or we'll allow it to be called away at what we purchased it for, and then we keep all the dollar bills there on the cash flow. Let's move on to Pepsi. Pepsi right here. We have our first, we started with the training wheel. We put a put credit spread on 185 short, 180 long, 2 contracts, $100. And then we sold to close the 180, collected 24. We were assigned the 200 shares at $85, $185 for a total of $37,000 bills. Sold calls on the 31st for $84, rolled it for $68, rolled it for $104, rolled it for $120, rolled it for $180. Hello. Collected a dividend of $253. Thank you very much. Rolled it again on July 5th for $280, rolled it again for $158, again for $74, and we even rolled it again for $230. Now that is that expires, I think it's this Friday, right? 8/11. Let's go to the big board. Yeah, so we got the 185 call on Pepsi expiring 8/11, and it closed. This stock went up just over $190, as you know, after earnings, and then now it's kind of come down with the market as we've had a little bit of sell off going on. Closed Friday at 184.80, so we'll continue to roll it. I think it has ex-dividend at the end of August, so I would at least like to continue to own it through the next ex-dividend, collect another pocket full of cash before moving on from a PepsiCo. So so that is correct. August 31st ex-dividend date with a payout of September 29th. So now we need to be owning it as of full ownership through the beginning of the August 31st. We already own it. We got to prevent them from being called away in the meantime. But then we can have them assigned anytime after that because we're already locked in on this payout date. So we don't have to be owner on September 29th to already have locked in the dollar bills, which would be what? $254. $254. What was the last dividend? $240. So see, they've raised their dividend in the meantime as well. So I don't mind holding Pepsi for, forever really, but I think, looking at the market between now and the end of the year, I could definitely see a sale happening in most all assets, most all securities. So if they're called away in the meantime and then I get back into a position under 185, I'd be doing just fine. So let's run the math to see where we're at annualized. So far, 75 days into the trade, we have collected $1,635 divided by 37,000 divided by the $75 we're in the trade, right? Multiplied by 365, 21.5. So 21.5% right now on the PepsiCo for the sugar water. I don't drink it, but I will certainly own it. So give me those dollar bills, would you? Because again, I'll reiterate, I'm most interested in cash flow because, as you know, money rule number 1 is money solves all of your money problems. Money rule number 2 is cash flow is king, cash is queen, and debt is the debt is the joker. So we love our cash flow here on the Wealth Snowball and in my personal feelings. So let's go to the next one, which I'm very excited to run these numbers and see where it ends annualized because Suncor has just been a sweetheart. We were in and out. So on May 26th, we bought 1,000 shares. 1,000 shares of Suncor for $28.56. We immediately sold those 10 contract covered calls for $290. May 30th, we were like, hey, that thing's still going down. Seems like a good price. So we did buy another 1,000 shares for $28.37 a share for a total invested of $56,930. Sold those 10 contracts for $830, and then we began rolling all 20 together. Look at that. We rolled it on June 2nd for $840. Hello. Then 300, then 200, then 380, then collected $672 in dividends, rolled it again for 360, for 400, for 380, for 480 before then allowing them to be assigned. I could have rolled it again, but I've had such an exposure to oil and energy that I thought, let me just take a little bit off the table. I'm still very bullish on oil and energy. Quarter two, if you look at the results for most of these types of companies, they were year over year down a lot. But that's not the story that I see, which is third quarter, they're going to be up dramatically over quarter two, which is going to be like, hey, this thing's doing great. And I don't see oil prices. They may dip just a little coming up, but then I see them going to back up to $100 easy based on what's going on in the world and even our own reserves, which are downtown to Chinatown here in America as well. So look at this. So what we also got was a little bump. Let's move our head out of the way. So from this, we received $58,000 for those 2,000 shares, which is above, right? Above what we paid, $56,930. So we did get share appreciation of $1,070. Now that, like you could just keep holding it. I know, but I could also put the cash flow in my pocket where it belongs. So this was the epitome of the Wheel of Fortune, because we collected premium, we collected dividends, and we collected share appreciation for a total of $5,422 bills. Let's see where this comes in at. It's going to be exciting. You could just look at the numbers and see that, because we were only in the trade 63 days. So 5422 divided by our original investment of $56,930 divided by the 63 days we were in the trade, annualized by the 365. Yeah, baby, yeah, 55.1% annualized. And it still gives us an opportunity if the share prices get back down to 50 or 29 or below. I'm coming back in, pushing some chips back in, because as I said, I see oil and energy being a big time bull the remainder of the year, although there may be a little dip in the meantime, which would give us an opportunity to get back in under the $30 mark on Suncor, because we're still riding Devon Energy. I can't wait to do that spreadsheet. We still have Valero Energy, a lot of shares on the board, a lot of dividends coming up on them as well. What else do we have? We have EOG Resources. We have Exxon Mobil. We still have a bunch of money into energy, but we did take the 58,000 off the table here, locking in our cash flow profits of 5422. So let's look. It's very light. I've been don't tell Sparkle this, but seems like I've been making more money by making less trades. But really, that's just the paper money. This is like paper money. It's real money. I could pull it out and buy a handful of Lamborghinis, but what would be the point of that? It is real money, but the ups and downs, unless you're selling, is just then paper money. But the main reason that the account has been doing so well, like if we look at the 3-month, we're up $56,658. And the reason is because a lot of the assets, a lot of the securities that I was taking on the chin have stabilized. And then the others, like oil, have gone up very nicely. And so that has led to a beautiful look on the increase of what this number shows. Because for the longest time, it was like depressing me. Not really, because I knew what was going to be building over time. But we've been stacking the premiums, stacking the dividends, and now with some of the share appreciation that's been going on, our account has been looking beautiful. But the bottom line for me is not necessarily this number, but the cash flow that I'm able to produce monthly. So I need to share with you July. I have it all handwritten. Who handwrites things? I've got it in my little notebook, all handwritten. I've written it all out, all of the trades, all of the premium, all of the dividends, all of the interest that's been collected on this account. I just need to get it into a spreadsheet to share it with you in a video. But if we look at expiring next week, we've got 1,300 shares of Energy Transfer. It's at 90% profit. Gilead is showing that it's 30% down, but that's just because of theta. There's, the time that's involved in this and the fact that it's still hovering right around $79. So it looks like a negative trade, but it really isn't, because I'm fine having Gilead called away at 79. PepsiCo, I would imagine, that the market is going to have a couple green days next week, but maybe have 3 red days. Still could be a red week, which would probably put Pepsi under the 185 mark, finishing the week, which again, we're perfectly fine holding that. And then what will determine whether we roll it or hold it through expiration will be, is it a green day on Friday? Target 143, we're doing just fine there. Once this expires, which it should expire at full profit on Friday, we'll hold off on selling any more covered calls until after ex-dividend date and earnings on Target, because I have no idea what's going to go on their earnings because of the Tuckabuck scandal that went on. If you know what I'm saying, you know what I'm saying. It's the sole reason we got into Target. And now it really hasn't done what I thought it would do by now, but it could easily get a huge shot in the arm with the earnings release, which will be when. So ex-dividend is August 15th. So we want to make sure we're owners of that, because we've got, what do we have, 900 shares, 800 shares? We'll check on that in a moment. It's going to be a $1.10 per share. So that's a lot of dollar bills that I'm going to be collecting. And then earnings, I think, is the following day. So yes, pre-market on August 16th is going to be the earnings, which is set at EPS at $1.50, revenue at 25.5 billion. And based on some of the returns that have been coming in, some of the earnings, I'm fairly confident that Target's going to be doing well, but I don't know how big of a hit they took during Tuckabuck Gate. So we'll find out, and I kind of want to be off the table at that, just in case there is a nice bump to the share price. Then we can sell more covered calls. So yeah, we have 800 shares. And what do we say that dividend was? Was it $1.02 or $1.12? Or neither. It's $1.10. So, but $1.10 times 800. Hello, $880. I'll take that all day. And drum roll, please. Twice on Sunday. So what else did we do? So Friday, again, I had recordings that went on that I was unable to publish because they had no darn sound. But I did buy 200 shares of Alibaba. They report earnings next week as well. My plan with Alibaba is a short-term play. I think that they're currently undervalued and they have earnings coming up. So I'm confident that from around the $97 that I paid per share, I could see them running up to 103 during next week. So if they're green on Monday, we're selling covered calls on those 200 shares through earnings to collect some nice premium, and then hopefully have a decent amount of share appreciation as well. Book a short-term trade, but we'll see. Alibaba always has decent premium, and if we continue to hold the shares, will just continue to sell covered calls, roll in, rawhide. But that's my prediction on Alibaba. Remember, none of this is financial advice. In fact, it is barely for entertainment purposes, is on its own. So that's what I have for you. Hopefully there's going to be sound to this video that I can upload today. Then I'd like to come back as early as later today or tomorrow with an update of all of July's trades, premium, dividends, interest. How did we fare in that regard? So thanks for tuning in. Make sure you do subscribe to the channel, leave a comment, a like, share it with a lovable friend, and I'll see you in the next video.